One of my favorite things about having this channel and doing this challenge is that I get to exercise patience, which is tough with my regular bag. I just like to touch it. This challenge, it's easier to take my hands off because it feels like it's our money instead of my money. So I have to be more smart with it. I have to be more calculating. Well, over the past couple weeks, you could have made a lot of money, or you could have lost a lot of money through your own hesitancy. We finally are at a point in the market where I feel like it's time to get back in, at least with some of it, and I'll show you why. Let's look at all of these charts. We're going to look at the Dow, the SPY, and the NASDAQ. The Dow has had some pretty brutal days the last couple days, and there's fear and everybody thinks it's going to go down more, and it definitely could, but it's still making higher lows. And we're at the bottom of our Bollinger threshold, which is our favorite place to buy. On the week, again, still pretty obviously higher lows. Definitely a weakening. When you're in a bull market, the middle band is usually cause for celebration. You can see we've dipped below it a little bit, but then held it. On the daily, we have that. It's still a red candle, but you can see the bottoms are being bought up pretty quick. If you believed in the process last time, it was a 6% gain within the next week, so things can move fast. That's beautiful. That's what you want to see. Market doesn't close for another couple hours, so it could head right back down there, but I think after pushing us down 10% in 3 weeks, people are kind of exhausted. Everybody's screaming the sky is falling, but until the sky actually does fall, it's just hearsay. People have been chanting that we're going to go below 40,000 all the way down to 30,000 for a long time, but we keep getting these strong looks up from it. Look at that. There's an overwhelming amount of green down here. And honestly, I'm a little bit late. I wanted to make this video right back here when I saw that, because after a bunch of green, they usually try at least one more time to crack through, but we weren't having it. Before we start buying, right now we have a portfolio of 35.7, down about $1,500. I think we had about 37,000. So we've had a drawdown of about 21%. If we had our whole bag and we'd suffered through that, we would have about 29,000 right here. So just for playing it a little bit cautious and being a little bit safer with our money, we held on to that $6,000 value. And now we can go shopping at a time when we feel a little bit better. If we think that the market's going to be turning for the best, then we should look at things that still have a lot of growth potential and things that have been brought down a lot. We're arguably towards the end of the bull run, which means it's a scary time to be holding anything. So you want to hold things that are the best insulated. No project is truly insulated. This whole space is speculative, but things have appreciated less than others. An example is Stellar Lumens XLM. While other things pulled a times 50 this year, this thing was range bound between 4 cents and 11 cents for the longest time. From its peak, it's down already an incredible amount. And so if this thing has made any progress in the last year, we can bet that hopefully it won't fall below this, which means at worst case scenario, it's a 50% drawdown. Not to mention it's bumping along the lower ranges of the weekly, which looks good for us. Normally when it does that, 3 cents to 7 cents, that's a 2x. Didn't actually touch right here, but it kind of did. 5 cents to 50 cents, woo, times 10, that'd be nice. Where the volatility is a little more compressed, I'm not expecting that, but even, up to the midline, that's a 50% gain, so try some of this. Band is another one. We actually bought it the first time around. This time it's still stuck in its range. Look at how flat those Bollinger Bands have been. It's incredible. A lot of these charts are pretty similar. Dash has had a pretty brutal fall from grace, but with the market cap of crypto going from a couple billion to 2 trillion, and Dash only heading from, at its very lowest, 31 to 130 right now, I'm pretty comfortable being in a 4x. Bitcoin very well could go down. It always can. But I find it's dumb to short when things are at these lower ranges. Because even if we do drop all the way down to 33, the Bollinger Bands will come down here and then we'll pop back up to wherever the middle one is. So that brings us back up to 42. So when it's down at the bottom like this, yes, it could drop, but if it does, you buy more because on the retrace, you'll be ahead. We're going to buy one more coin, and then we'll have 10,000 to invest if Bitcoin does decide to dump on itself. Now, we will have to update the whiteboard. 5 minutes of scrubbing later. Don't think you're supposed to leave dry erase on for months at a time. We're investing not because we think the market is incredibly strong. In fact, I think the market is weakening. But do I think the market is crashing? No. with interest rates and revaluations of companies, there's bound to be some pain, but that also means there's bound to be some gain if people think that things are oversold. Unless there's some seriously negative catalyst, which we would respond to within a day, so losses wouldn't be too bad, then this is a good place to bounce.